So we all know that trading is incredibly difficult. It is arguably one of the hardest ways to go about consistently making money. And that's why I even put at the top of my Twitter and my YouTube channel, making easy money the hardest way possible. And I would say one of the things that not only new traders, but also seasoned traders like myself, really I'm making this video for myself, is that I am very guilty of over trading. I end up taking numerous patterns and things throughout the day, and a lot of times I end up getting chopped up. I'm really good off the open. I can get direction right. I can get that move. And then I usually play for continuation. And then that's where I can get into trouble. So whatever I've made off the open, there's a lot of times where I give that money back. And it's just kind of ridiculous. So I thought to myself, what if I came up with kind of just a open strategy and I used ChatGPT and artificial intelligence to come up with not only the strategies, but also the statistics behind those strategies. So I made a post on my Twitter. Keep it simple. 5-minute and 15-minute ORBs plus, this is key, a strong news or technical catalyst equals a simple, high probability trading strategy. I just asked ChatGPT, the app on my phone, which by far is one of the best apps I've ever downloaded in my entire life. If you have not downloaded that, you should. And I just talk to it whenever I have questions and I get incredible answers back. So I decided to ask ChatGPT and use artificial intelligence to get some data. I asked ChatGPT, what is a profitable day trading strategy? And then I also asked it, what is the win rate for a 5-minute opening range breakout strategy? The win rate for a 5-minute opening range breakout strategy, ORB, when a stock is a catalyst or news, that's key. It says it can vary based on obviously market conditions, risk management, and execution. But look at just this general answer. Average win rate, 50 to 70% with a strong catalyst. Earnings, FDA approvals. I don't trade the drug stocks, so earnings, major news, or a technical catalyst, a really big break of support or resistance, 60 to 75%. And the longer you've been trading and the more you're more experienced when it comes to reading price action, I'll bet you could get this close to 70, 75%. That's pretty crazy. When I looked at this, I realized I am just doing too much shit. Why not just focus on a 5-minute ORB and then also a 15-minute ORB? So if the 5-minute ORB doesn't really happen just because there's some inside candles and it doesn't break the 5-minute range, then wait for the 15-minute range. And then I asked ChatGPT again, what is the win rate for a 15-minute ORB? And check this out, with a strong catalyst, earnings, M&A news, just significant news in general, 65 to 75%. And like I mentioned before, I'll bet with experience, you could probably get this consistently to that 70, 75% win rate. So when I see this, I ask myself, why am I doing anything but these two strategies? It's nuts. As traders, we tend to overthink everything. And we're doing numerous different things. We're trading numerous different setups and patterns. And that's where you can get into trouble. Because a lot of times we're really good at one, but then we kind of continue just because we've seen some others work. We get chopped up. We end up giving profits back. And I'll bet had we not taken those extra trades throughout the period of weeks, months, or if not years, there'd be so much more left on top of the P&L. So I just kind of thought this was very interesting and I wanted to go over it. So there's some of the percentages. And now the next thing that I'm going to do is talk about some actual setups, because there were some very clean setups today. Now keep in mind, these are going to be cherry picked. It's not like every single day setups are clean. Things work great. Nothing works 100% of the time. But just based on some technical catalysts and news catalysts, they seem to work pretty well. So the first off, I'm going to start with Tesla. Tesla had what I think is a technical catalyst. So sold off a few days in a row, but then it came down to this double bottom area, 324.70, essentially 325. Knowing that there's a double bottom, the overall market has been weak a little bit, and Tesla has the personality that when it breaks support, it can really get going in one direction. That's exactly what happened today. So just knowing that 325 is an area of support, and I would think that, okay, in an overall weak market environment, if Tesla breaks support, knowing that it has the momentum factor, that is a technical catalyst. And if it breaks that and stays below it, there is a chance for more downside. So look at a 5-minute chart. Just keeping it very simple. What happens? It actually opened slightly red, has a little bit of a push off the open, just focusing 100% on the candlesticks, worrying less about pre-market high, pre-market low, every little level. Okay, It makes a dip below 324.70, tries to reclaim. I actually like this because if I'm going to trade the 5-minute range break, I'm a big fan for, let's say it wants to go to the downside, that first 5-minute candle to be green or at least have some downside wicks. So it shows that buyers were trying to step up, expecting price to go higher, and then basically you rinse all those buyers out. That's an ideal situation. So Tesla had a little dip below 324.70, tried to reclaim, failed. Candle closed a little indecisive, and then look at the next 5-minute candle. Does a 5-minute range break to the downside. I like that there's this wick here because that shows that buyers tried to step up, buy the dip, maybe thought that Tesla was going to hold 325, potentially goes green on the day. It does not. It ends up clearing out the low, does a 5-minute ORB, and look at where this went. This is continuing to go lower. Now, obviously, holding your winners is the tough part. So that's a whole different style of this, but that's using, maybe a prior candle high or using VWAP or using a 9 EMA or a 20 SMA, whatever works best for you. But as far as just the entry criteria, I am thinking that it's, you're taking the break of the 5-minute candle to the downside and then risking off the high of the candle or risking off like VWAP, because I know VWAP, I believe, was right around 322. So keeping that risk a little tighter. And then see you later. Really, it's just holding your winner, and that is a massive winner. That's obviously not going to be the norm, but that is a great example of Tesla, a technical catalyst, and then it gets the breakdown of support, and you get some real continuation. Now let's go over a couple different examples. I want to also go over one that is not super clean. SMCI had a catalyst that it was basically going to report whatever it was going to report to the SEC. They had the deadline, they're right here, expected to meet a key deadline. And it seemed like it ended up being a sell the news event because in the pre-market there was a big pop and then it sold off aggressively. So just marking some basic levels. Prior day high, prior day low. There was a gap fill at 48.18. The gap fill, less significant. Let's just focus on the open. So what happens? You get a pretty indecisive candle below prior day low, 50.26, but just focusing on just the candlesticks. There's the high of the 5-minute. There is the low of the 5-minute. So I like, once again, there is the downside wick here showing buyers trying to step up, thinking that maybe this is going to squeeze, go the other way. And then this next 5-minute candle at 9:35 ends up clearing out the low. So all those buyers that were in this, rinse them out. And here's a good example of sometimes it doesn't work great. Once again, I'm just a scalper. So if I get a quick move as far as entry criteria, I'm going to take that. But here's a good example of it's a little choppy. It doesn't work perfect. You get the break of the 5-minute low. You do get a move though. So you get the break around 48.50 and it does make a low of 47.41. So there is a move there. So it does work. It just doesn't work incredible. And then maybe this is where having a once in the money, having a stop at break even can kind of save you from the potential squeeze the other way. But just an example of a 5-minute downside ORB, because it did have the news. There was a little bit of a trend to the downside. It was opening red on the day, so just kind of going with the trend. You do get the 5-minute ORB to the downside, and it ends up with a nice move to the downside. Now let's go over to HIMS. So HIMS reported earnings, but you had HIMS reported earnings, opened below prior day low. I mean, you get this crazy run up, and then below prior day low. So it's opening lower, so ideally trying to go with the trend. And then here's an example of what's going to be more of a 15-minute opening range break, because what happens? The first 10 minutes, this has a nice move to the upside, just patiently waiting. And then you get the reversal. Look at this bearish engulfing candle. And then the low of that opening was 39.81. So watching that level on a 5-minute, you do get the breakdown here for a nice little move. But let's just go to a 15-minute. So looking at a 15-minute, what was the low? Look at this candle. Big topping tail wick showing sellers clearly stepping in, overpowering the buyers. And then you get the 15-minute ORB. Clears out the downside, 39.81, and look out below. I mean, technically, still in this, depending on how you want to trade it, using a 9 EMA, using a 20 SMA, using the VWAP. If you used a prior candle high, you'd be out right around 38. But this is a great example of a downside 15-minute ORB on a stock that has a catalyst. That's the key factor with all of this. It has the catalyst. It reported earnings. So wanting to focus on news, stocks that have news when it comes to the 5-minute ORB and the 15-minute ORB. And all these are going to be to the downside just because the market got hit pretty hard today. And this is just kind of everything trended to the downside. But here's a good example of another stock. Zoom. Reported earnings. You get the gap down, breaking some key levels of support. And then look at the 5-minute candle. Now this is an example of where this didn't really show a lot of buyers stepping in, but it still did the 5-minute opening range break. It actually had follow through because there wasn't really a big wick to the downside. The first 5-minute candle didn't close green, but it did break a key level of support, this prior little pivot low here, which is 76.38 to be exact. So we'll make sure to get that correct. And then once it breaks support, it holds below support. First 5-minute candle closes red. There is a little wick here showing buyers tried to step up, but I don't think it's that significant. But here's a good example of sometimes the 5-minute ORB just works really well when a stock has news. And then it clears out the low of that 5-minute candle, 74.65. And look at that move to the downside. Now, once again, this is just quick scalping. If you try to hold this all day, you pretty much get stopped out for flat. So it shows that it's not always going to be an all-day trend. And I see the risk on this being pretty tight because once it breaks that 5-minute candle low, using the high of that 5-minute candle as a stop, 75.22. So there were some good examples on the 5-minute ORB, the 15-minute ORB, and I believe that this can work both ways. I think that what works best is that when you get a gap to the upside, trying to, as long as it's not super excessive, kind of trying to focus on the trend. Ideally wanting a 5-minute ORB or a 15-minute ORB to the upside, going with the trend, and then to the downside, 15-minute downside ORB, 5-minute downside ORB. I really do like that if it's going to be 5 or 15 minutes, the first candle closes the opposite color of the direction. So if you get a gap up, that first 5-minute or 15-minute candle is red, and then you get a bullish engulfing green candle on the 5 or the 15, and then vice versa. If there's a big gap down, negative news, the first candle, whether it be the 5 or the 15, is green, and then we clear out the lows. But I showed some examples that doesn't necessarily have to be the case. Strictly just focusing on 5-minute ORB, 15-minute ORB, and not really even thinking that much, but making sure to manage risk, it seems to work really well. So this is something that I'm going to focus on, try to cut out a lot of the other stuff that I do, track this for a little bit, and see how it goes.